getting into it, and hopefully this will answer some of your questions a bit more. Just by doing that poll, I mean, the results there speak for themselves. Wanted to really illustrate that this isn't something that's happening to just one or two of you, but really the majority of you all, and want to illustrate that it's really easy to feel like this might be a personal attack on your operation, or that the carrier is out to get you specifically, even though you may have never had a claim or have been with this carrier for 20 years and don't understand what you did wrong. So what I'm about to get into and explain hopefully will showcase that that's not the case, and that this isn't personal against you by any means. So with that, we will dive into, whoops. All right, now we're on the right slide here. Insurance rates are created by using average expected losses in a year's time. That doesn't include having 5+ catastrophic events within 3 years, as we've seen since the Tubbs fire broke out in October of 2017. Carriers have been paying a high amount of total loss claims due to these wildfires and the amount of mass destruction that they've left in their wake. We've seen entire neighborhoods burn to the ground, and being from Chico, something that hits home for me is we saw an entire city go to the ground, and that comes at a price at a personal level and financially. The fire season in 2017 generated $11.8 billion in losses, and 2018 was even more at $12 billion. And mind you, this is just from wildfires alone and doesn't include normal losses like somebody backing into a tank and losing wine, or dropping a case of wine, or having just the normal day-to-day losses you might expect. This is just singularly from wildfires. So really illustrates how costly those have been to the state. Along with this, state laws require that insurance companies have a certain amount of money set aside in what they call a reserve fund to even be able to operate within the state. And in order to be paying these unexpectedly high losses over the past few years, carriers have had to pull from those reserve funds. And then in order to be able to stay in compliance with state laws, the rates are raised in an effort to replenish the fund. Along with this as well, as long as having this fund in place, carriers also have to purchase a type of insurance themselves from international reinsurance companies. And these companies aren't just affected by events that happen in California or in the US, but rather worldwide. And in 2017, a world record was set for the highest amount of losses paid in a year at $135 billion. Now, thinking forward to the end of this year, we might set another record, thinking about the Australian wildfires and COVID-19, and just so far we've already seen a lot of losses occur, abnormally so. So these reinsurance companies, as our insurance companies have been doing, raise their rates that carriers must pay. And since insurance carriers have to purchase this insurance to be in operation, they're facing an increase in their operations costs, just like I'm sure you are when your insurance is raised. And at the end of the day, insurance companies are businesses that are going to be making decisions based on profitability, as I'm sure you make decisions as well for your business. And with the increased risk of massive wildfires in California, many carriers have decided that it's not worth the risk any longer, and they want to shy away from more rurally located areas, which that's where most wineries and vineyards happen to be. If they do decide that they want to provide coverage, the rates are going to be increased because of the perceived increase of risk of doing business there. They have to mitigate that risk somehow, so they're increasing their premiums as a way to do so. But with this bit of a background of how insurance works, what can you do to help lessen the impact on yourselves? While it's not necessarily possible to change the rates that carriers have to charge in order to stay in compliance with state laws, there are things that you can do to lessen the impact on your operation. Most importantly, you must be proactive and prepared for a wildfire in your area. For a lot of carriers, it's not a question of when a fire or if a fire will break out, but when that will happen. So create defendable space around your buildings by clearing brush and limbs, keeping it free from debris. I'm sure you've all been told this already, so just want to reiterate the importance of doing that, as well as having a wildfire plan in place that outlines the protocol for if a fire breaks out. How are you going to lock down? What information or products get taken with you? What do your employees do? What is your emergency plan, essentially? Doing these things are examples that show carriers that you're taking an active role in preventing losses from occurring on your property, and that you're invested in the longevity of your operation, which to them makes them more willing to partner with you and makes you seem like a better risk for them to take. Along with this, wildfires and now COVID-19 as well, it's really, as the question mentioned, what to do when you receive a non-renewal. Explore what options are available to you. Right now, the insurance market is shifting to try and find a new equilibrium and a new balance. So with that is going to come new programs developed or new carrier preferences. And with that, be sure that you're working with somebody who is also going to be proactive in seeking solutions for you. Being reactive in this scenario, as opposed to proactive, could cause you to be paying higher premiums or have gaps in coverage, or even have a lapse in your coverage because who you're working with currently wasn't able to find replacement coverage for you before your policy was non-renewed. So really working with your broker, seeing what they're doing. And again, as I mentioned with COVID-19, really leverage your relationship with us. Discuss what you're doing with your broker so that we can then take that information and relay it to carriers to show that you are taking the steps necessary to try and mitigate the potential loss at your property. If your agent is providing complimentary loss control services and you haven't yet taken advantage of those, now is the time to do so. They should have developed some program or services for you that it's really important to try and take advantage of those and use all the resources that are available to you. That's our job, is to get information out to you and to try and make you be the partner with you to make you the most attractive operation you can be, to make sure your insurance is in place. That's, as I said, our job is to find the best solution for your operation at this time. Have that second set of eyes review your current policy. Right now, more than ever, it's really important to have multiple opinions on what your program looks like right now. So be open to having your insurance program reviewed at this time. And with that, again, I've touched on what I want to with the wildfires and how that's going to be affecting insurance for specifically wineries and vineyards, and then turning it back over to Beth here real quick to see if there's any questions I can help answer. Please know that my door, quote unquote, is always open. As I alluded to in the beginning of the webinar, agriculture really is my passion at the end of the day, and that's why I'm doing what I'm doing. I feel that this is a way for me to be able to give back to this community. So I would love to be able to answer any questions you have, or even just have a further discussion about anything really surrounding your insurance program. Happy to help in any way that I can.